It's the first weekend in September, and this is the first edition of Capital Market. In the spirit of Eid al-Kabir, I'm Temple Ashaju. Thank you so much for joining us. On the program this evening, we note the month of August has come and gone. Of course, the stock market opened bullish but closed on Thursday bearish by 0.96% month to date. The performance of the markets will form part of our discussion this evening as we'll review the listed securities with our guest who will be joining me shortly on the program. Again, the federal government hinted recently that it plans to issue about $3 billion in foreign debt of longer tenure to refinance the domestic debts, particularly the high-cost treasury bills. Now, the plan is in line with the debt management strategy of the federal government for the years 2016 to 2019, with the overall objective of reducing its total cost of borrowing to achieve the country's strategic target of an optimal debt mix of 60% and 40% for domestic and external debts, respectively. Subsequently, the research department of FSDH Group produced a report stating that this development brings about an imminent decline in the yields of Nigerian treasury bills. No need to panic. FSDH reports, in particular, that is for the 364-day papers. But you'll just have to sit back to listen to that analysis, which will come up later on the program. Now let's remind you of some of the stories we had this week. And of course, we'll be starting with the Fitch Rating Agency that released the report on Nigeria. Fitch Ratings this week affirmed Nigeria's issuer default rating at B+, but with a negative outlook. The report forecasts Nigeria's growth at 1.5% in 2017 and 2.6% in 2018. This is based on increased foreign exchange to the non-oil economy and fiscal stimulus. The rating firm sees inflation declining to 11% in 2019 and current account surplus increasing from 0.7% in 2016 to 1% in 2017. Fitch Rating says foreign exchange liquidity has eased as the new investors and exporters windows should be considered the relevant exchange rate, although the FX market remains far from fully transparent. The agency says its current outlook is negative and does not currently anticipate developments with a material likelihood of leading to an upgrade. During the week, the Securities and Exchange Commission gave approval for the 50 billion naira Tier 1 capital raising via rights issue of Union Bank. According to the lender, the rights issue will be open for subscription in September. During the offer period, 12.1 billion ordinary shares of 50 kobo each will be available at 4 naira 10 kobo per share on the basis of 5 new shares for every 7 shares held. The qualification dates for the rights issue, which had already been announced by the Nigerian Stock Exchange, is August the 21st. And Prestige Assurance Restructuring has announced that plan to the Nigerian capital market. An ordinary share capital of nearly 3 billion naira to 1.9 billion naira is expected to be raised. The company's share capital will be reduced from 5.37 billion naira ordinary shares to 3.81 billion ordinary shares to write off the capital lost to the insurer. Prestige Assurance further explains that the capital reconstruction looks to wipe out the firm's accumulated retained losses of nearly 776.51 million naira and create more value for its shareholders. And on the sidelines of trading activities, Stanbic IBTC Holding released its first half period results ended for the period June 30, 2017. The firm recorded a 36.28% increase in gross earnings to 97.20 billion naira as trading revenue grew to 11.97 billion naira. In addition, profits after tax stood at 24.11 billion naira, rising 113.06% from the same period in 2016. An interim dividend of 60 kobo per share was proposed. This week, Analysts expect a mix of profit-taking and bargain hunting on companies like these that have released impressive results in the Nigerian stock markets. It's now time for a review of some of the markets, the NASD OTC, the FMDQ OTC, as well as the equities market proper. And we'll start off with the NASD OTC, where the unlisted securities index dropped 2.42% to 581.12 basis points, as the market's capitalization plunged to 393.26 billion naira. Volume of traded securities came in at 9.86 million, transacted for a value of 99.52 million naira. And the market, which is the smaller size market in the Nigerian capital market, had just 53 deals in the whole of the week. In the just concluded week, prices of federal government bonds traded at the OTC, FMDQ OTC fell for most maturities amid sustained profits taken. Numbers available to us yesterday, Friday, the 1st of September 2017, shows that investors continue to go for a mix of short-tenured securities as well as the longer-term securities. April 2037, June 2019, and January 2026 were the main attractive securities, bonds, federal government bonds, basically, to investors, as total dues came in at 91, and total value of what was transacted is put at 10.60 billion naira. On the flip side, Treasury bills markets saw some sentiment as well, good sentiment from investors, as the September 2017 October